In value investing, one principle is unavoidable: the circle of competence. Many people misunderstand it, treating it like a restriction as if defining boundaries means missing opportunities. But in reality, it is the core defense against market risk and the foundation of long-term returns. Asterisk: in a market full of volatility and temptation, staying within your circle of competence is far more important than chasing trends. Asterisk: in 1996, Warren Buffett first introduced the concept: investors don't need to understand every industry, they only need to correctly evaluate businesses within their own understanding. This is often mistaken as simply familiar industries, but it actually means being able to see through a business's core logic and anticipate its key risks. Asterisk: you might work in an industry for 10 years and still not truly understand its profitability, moat, or sustainability, meaning it's not in your circle of competence. On the other hand, deep cross-industry research can bring new areas into your circle. The key is not the size of the circle, but the clarity of its boundaries. Asterisk: Buffett once said that someone who clearly understands their limits is often more successful than someone with a large but vague circle. Asterisk: many investors fall victim to the Dunning-Kruger effect, mistaking luck for skill during bull markets and blindly entering unfamiliar fields, often leading to permanent losses. The root problem is in clear boundaries. Asterisk: never invest in what you don't understand is not just advice, it's a principle for survival. The greatest risk in investing is not short-term volatility, but permanent loss of capital. A stock may fall 20% and recover, but investments outside your competence may collapse due to fraud or a broken business model, losses that may never be recovered. Asterisk: this principle also helps combat human weaknesses. Markets constantly tempt investors into emotional decisions. Over 90% of losses come from blindly following the crowd. Asterisk: Peter Lynch once said, "It's better to miss an opportunity than to make a mistake in an unfamiliar field." Missing an opportunity doesn't cost money, but one wrong investment can erase years of gains. Asterisk: long-term compounding happens only within your circle of competence. Asterisk: only by truly understanding a company can you hold during crashes, buy during panic, and stay invested through growth cycles. Buffett emphasizes that earning consistent returns year after year is far more important than chasing high but risky gains. This is the result of staying within your circle. Asterisk: how to define your circle of competence. Asterisk: a practical approach involves 3 steps. Asterisk: understand the core logic. Asterisk: remove emotional or trend-based reasons. If you cannot list at least 3 solid fundamental reasons, it's likely outside your circle. Asterisk: anticipate risks. Asterisk: the more risks you can identify, the deeper your understanding. Asterisk: plan responses. Asterisk: if your only strategy is hold and hope, you don't understand it well enough. Asterisk: Buffett also suggests a simple method: list the businesses you truly understand, define your boundaries, and filter out anything that doesn't meet your criteria. Asterisk: before making any decision, ask yourself, asterisk, is this within my circle of competence? Asterisk: do I have unique insight? Asterisk: can I the worst case risk? Asterisk: also, create a no investment list to eliminate bad decisions from the start. Asterisk: regularly review your investments, clearly separating what is inside and outside your circle. Identify areas you only partially understand, compare with expert opinions, and refine your boundaries over time. Asterisk: expanding your circle the right way. Asterisk: staying within your circle doesn't mean staying stagnant. Expansion is necessary, but it must follow principles. Asterisk: start from adjacent fields, not completely new ones. Asterisk: use small amounts of capital or simulations to test your understanding. Asterisk: focus on deep, structured learning, not fragmented information. Asterisk: Duan Yongping once said that truly understanding a company is no easier than earning a college degree. He spent over a decade deeply understanding just a few companies like Apple and Moat, highlighting the importance of focus. Asterisk: avoid 3 major traps. Asterisk: overconfidence from limited knowledge. Asterisk: ignoring opposing viewpoints. Asterisk: confusing learning with speculation. Asterisk: expansion should aim at deeper understanding, not quick profits. Asterisk: real-world lessons. Asterisk: many investors have learned this the hard way. Some who succeeded in one sector lost heavily when chasing trends like crypto without proper understanding, only to later return to their core expertise and regain consistent profits. Asterisk: Buffett himself avoided tech stocks during the dot-com bubble because he didn't understand them, successfully sidestepping the dot-com bubble crash. Later, After recognizing the consumer nature of appling, he made it a major holding, showing how to both respect boundaries and evolve over time. Asterisk final insight asterisk in today's world of information overload and AI tools, the circle of competence is more important than ever. I can provide data, but it cannot replace true understanding. Without your own framework, fragmented information will never become real investment skill. Asterisk your circle must evolve, but through disciplined learning, not impulsive expansion. Asterisk ultimately, the circle of competence is not a cage, it is a moat. Asterisk by clearly understanding your limits, focusing deeply within them, and expanding carefully through rational learning and small experiments, you can find certainty in an uncertain market. Asterisk as the Stoic philosopher Epictetus taught, distinguish between what you can and cannot control. That is the foundation of lasting success in investing and in